What's up everybody? Welcome to the Stocks channel. My name is Corey and today we had another volatile day in the stock market, but we did pull out a green day in the S&P 500 and the Nasdaq 100. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so we did have a very volatile day today, but SPY did close in the green, going up 0.15%. Now we did have that huge gap down open and we did open right on top of that open gap. That gap will close when we get just below 436, but today that gap did not close. That level did act as support, so we still do have support around the top of this gap at SPY levels of 436. We bounced back over that resistance level at 437 and we did close right around 440, just below that resistance level at 441. So remember, 441 used to be our strong support level, which is now going to be a resistance level we need to break back above. Our 20 simple moving average is just above right around 441.5, and we do need to get back over that 20 simple moving average to get back into a bull market. Now, as long as we're below the 20 simple moving average, it is very likely we're about to lose that bull trend as soon as tomorrow. And that doesn't necessarily mean the market has to tank, but the market will become a lot more choppy. When you don't have a trend in either direction, which we won't have a trend for the bulls or the bears, the market will be a lot more volatile and a lot more choppy. And it's going to be extremely important that you watch critical price action at these levels. So right now, these critical levels are still going to be the gap close and that support level right around 436. And just below that, you have the 50 EMA of support at 434. Below the 50 EMA, this market is going to look like it's rolling over, even though it already does look like it's starting to roll over below the 20 simple moving average. However, above the 50 EMA, there's still hopes this bull market hangs on, because you have to remember there's a more macro level trend going on as well. On weekly and monthly charts on SPY, we are still in a bull market. So on the daily chart, as long as we're staying over the 50 EMA, there is still hope that we don't lose the bull trend in the intermediate degree. So while daily analysis is important, do not forget we are still in a macro level bull market. So you don't want to get overly bearish as long as we're over these critical support levels. And right now, the most critical support below 441 will be 434. So watch that level on SPY very closely. If we break below the 50 EMA, this market is going to get a lot more volatile and we will more than likely see increased volume selling. But right now, we still don't see high volume selling. We did have another high volume day, but a lot of that volume was actually buying the dip and it was not high volume selling. So overall, the high volume selling is just not showing up, which is actually going to be a bullish indication that we're not seeing mass panic selling at this time. That doesn't mean it won't come, but right now we're just not seeing it. If we can get back over 441.5, it's very likely SPY is going to attempt to break out to brand new all-time highs, and we will still have resistance at 446, and above that we could go back to that next price target at 449. But pay attention to this resistance at 441, because as long as we're below that, you do need to be cautious to the downside and watch these critical support levels at 437, 436, and 434. On the Nasdaq 100 triple Qs, we were up 0.48% today, and again, we had a very volatile day. We had a gap down open, and we opened right on top of that 360 support level, and we did see a very strong bounce off that level. We broke back above the resistance level at 362.5, and we did close below the 5 EMA. So we are getting resistance right around that 365 level, which is our 5 EMA, and we do have a negative sloping 5 EMA. So right now, it is definitely looking like the bulls are losing momentum, even though the price action is holding up above support. You can see these Bollinger Bands are still very tight, so we're still in a very low volatility market with the triple Qs because the Bollinger Bands have not yet expanded, allowing for more volatility. So that gap down open was well below the Bollinger Band, and that did get bought up like crazy, and we did close back inside these Bollinger Bands. So watch these support levels right around 362.5 and 360 very closely, because they are very likely going to continue to be strong support. Below 360, you're looking for the 50 EMA of support at 358, and below 358 will look like we're rolling over yet again and possibly coming back down to support at 350. So watch those critical support levels very closely. To the upside, we need to break back above this 20 simple moving average, which is just barely below 367. So if the triple Qs can break above 367, we could regain the bull trend and attempt to break out to brand new all-time highs yet again. So watch that critical resistance at 367, because above that we will start to look a lot more bullish. Again, we see increasing volume, but a lot of that volume was buying the dip, so we don't see that high volume selling in the triple Qs. In the Dow Jones, we were down 0.18% today, and we did see the Dow Jones testing the 50 EMA as support right around that $348 support level. We bounced above that level and closed right around 349.5, so we are seeing the Dow Jones holding that support level at the 50 EMA. We just barely lost the bull trend, and we need to see the Dow Jones getting back above 351 and closing above that 20 simple moving average just below 352. If the Dow Jones can get back over 352, we could start regaining the bullish trend, so watch that level very closely. On the Russell 2000, we were down 1.2% today, and the Russell came all the way back down to that support level at 212. Below 212, we could still find support at 209.6, but below that, look out below because the Russell 2000 is going much lower. So the Russell 2000 has its back against the wall at the last two critical support levels before it breaks down and gets much uglier. Price action closed well below the lower Bollinger Band, but those will continue to expand. To the upside, look for resistance at 215, the resistance trend line right around 217, and our strong resistance level will be 219. Do remember the Russell 2000 is in a full bear trend and price action is below all the moving averages, so the Russell 2000 is in a strong bear market, which does mean the bears will continue to short it at these resistance levels. On the Arkk ETF, we were down 1.72% today, and we see Arkk closing below that level at 115.5, which is now going to be a resistance level. We're very close to getting the bear trend. We just need that 20 simple moving average across below the 50 EMA and the price action to stay below all the moving averages. So if Arkk is going into a bear market, we will break down below this support level right around 114, and we will make another lower low on this chart. If we break below 114, look for support at 112.6, and below that we have support at 109 and 106. To the upside, we'll have resistance at 115.5 and that 50 EMA at 120. On the VIX, we did see more volatility today with the VIX going up about 0.5% and closing above the upper Bollinger Band at 21.6. Remember, the VIX above 20 means there's going to be a lot more volatility, and that does favor a stock market pullback, which we've obviously already had. So at this point, the pullback could be ending if we do see the VIX getting crushed down below these levels. If we see the VIX getting back below 20 and closing below 18.2, we could see new all-time highs in this market yet again. However, if the VIX starts closing above 23 and breaking out and closing above this resistance trend line, that will start looking like the pullback is going to start turning into a stock market correction, and we have a lot more downside to go. If I zoom out here, you can see the VIX has been forming lower highs. So if the VIX does break that trend and starts breaking and closing above 23, that does increase the chance we will see that stock market correction. So watch the VIX at that level at 23 or the breakdown below 20 and eventually breaking down below 18.2. Below 18.2, you're going to see a continuation of the bull market, and above 23, you're going to see a more volatile stock market correction. On Bitcoin, we're currently up over 4%, and Bitcoin did bounce off of that 20 simple moving average of support right around 44,000. We're back above that resistance level at 45,000, and we will have to take out the daily high right around 48,000. Remember that my price target on Bitcoin is 51,000 as long as we have the bull trend, which we still do. Critical support will be down here at 44,000 and 43,000. And if we break below that, look for support right around that 50 EMA and support level at 40,600. On Amazon stock, we continue to see the falling knife with Amazon going down 0.42% and closing below that support level at 32.08. The next support level I want you to watch on Amazon will be down here right around 31.35. And remember that Amazon is officially in the bear market because we did get the confirmation of the full bear trend with yesterday's price action close. So Amazon is still in accumulation mode due to the fact that we have this huge gap to fill above at 35.80, and we do know that gap is very likely going to get filled. It's just a matter of when. So look to accumulate off of these support levels below, knowing this is a long-term trade to close the gap at 35.80. To the upside, we now have resistance at 32.08, 32.80, and 33.11, and we need to start breaking back above some of these moving averages because you can see Amazon's price action has been staying below a negative sloping 5 EMA. So this is why I say it's a falling knife. So you need to be careful if you're buying Amazon at these levels. You need to understand you're accumulating it for the long term until we can start breaking back above some of these resistance levels. On Tesla stock, we were down 2.25% today, and we closed right on top of the 50 EMA of support, which is right around 672. Remember that Tesla is still looking bullish because we still do have higher highs and higher lows, but we did officially lose the bull trend. Price actions below the 20 simple moving average, and we did get the 5 EMA crossing below 2 of the moving averages. So we no longer have the benefit of the full bull trend, but we still do have bullish price action forming a higher low and closing above the 50 EMA. So the next resistance level you need to see Tesla closing above will be 692. We have a gap to fill at 714 and a gap to fill at 732. So those are still going to be our price targets as long as we're staying above the support trend line right around 660. If we break below 658, Tesla will be looking a lot more bearish, and we're very likely coming back down to that support level at 626, and below that we could be coming back down to 594. But right now, watch that strong support level right around 672, because as long as Tesla is above the 50 EMA, it could come up here to close these gaps above. On Apple stock, we were up about 0.25% today, and we did close below the 20 simple moving average for the second day in a row. That support level at 145 did hold up as support, but we are getting price action below our 20 simple moving average. We still have the bull trend, so Apple could bounce as soon as tomorrow and still maintain the bullish trend. We're seeing nice volume still, and we still do see a stable price action above support, so there's no reason to panic on Apple at this time. If we can see Apple getting back above 149, we could start running towards that price target at 156. If we break down below about 145, we could start retesting the 50 EMA as support just above 142. Below that, look for the gap fill at 137. On the financial sector, we were down about 0.75% today, and we did close back above the 20 simple moving average, and we're very close to closing the gap right around 37. Look for a retest of the 50 EMA as support, which will also close the gap, and that could be a great buying opportunity for the financial sector, which is still in a bull market. The industrial sector was down 0.7% today and closed below all the moving averages, and we did lose the bullish trend. This is definitely not a bullish look, but we still could bounce from these levels as soon as tomorrow and try to get back into a bull market, so watch that price action at the 50 EMA. The healthcare sector was up 0.45% today, closing back over the 5 EMA and still holding on to that bull trend. The energy sector was down 2.6% today, and we still do have a gap to fill to the upside. Remember, the energy sector is in a bear market with a full bear trend and price action well below all the moving averages. So jumping back over to the S&P 500, this is definitely going to be a more volatile and choppy market because we are starting to lose some of the bullish trending. That doesn't mean the market has to roll over and die, but it's definitely a warning sign that you need to pay attention to. We're getting critical price action closing below the 20 simple moving average, and we did lose the bull trend in the triple Qs, and we could very likely lose the bull trend in SPY as soon as tomorrow. So pay attention to that, because without the bullish trend on the daily chart, we will see a much more volatile and choppy market, and we no longer have the bullish trend to push the price action higher. Remember, the bull trend pushes the price action higher, and without the bull trend, we could start falling to the downside. So you need to still be cautious, and you need to still watch these critical support levels closely. As long as we're staying above support though, there's no reason to overly panic and start selling all of your positions. It's always possible this is just a pullback and not a correction, and we're still in that pullback territory of a less than 3% drop. So watch that 50 EMA as support and continue to stay objective. This is still a bull market. We're just starting to see a lot more volatility and chop. So a pullback is completely normal, and even stock market corrections are completely normal in all bull markets. They're a buying opportunity as long as you're prepared. So if you're following along, hopefully you are prepared for this volatility and you're taking it seriously and capitalizing on these pullbacks. Also remember that I have my own trade alert service that does very well in volatile markets called BANC Trade Alerts. It only trades TQQQs and it's very simple to follow. I'm running 50% off promo code for your first month, so now could be the best time to try out BANC Trade Alerts. If you're interested in joining, you can find out how to join by clicking on the link in the description below. I also have the Stocks Channel Discord where I do intraday updates and analysis to help you navigate this volatile market. If you're interested in joining the Stocks Channel Trading Discord community, you can click on the link below in the description and find out how to join. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.